Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. I'm recording this, as usual, later Friday morning here on June 9th. So Tyler did the video last weekend, did a great job, but overall the last 2 weeks I would just say it's been very encouraging, kind of how you would want the market to act if you were going to draw it up from a bullish point of view. The things that have been strong have remained strong. We've seen more leadership emerge, and this week was interesting in the sense that Wednesday, I believe it was, we had a big rotation where the broad market strengthened and the leaders got hit. But then the leaders bounced back and the broad market stayed strong. So net, it's kind of like the best of both worlds, right? Things have broadened out, small caps, mid caps, other, sectors, things like that. Plus, leadership remained strong, NASDAQ remained strong, defensive stocks remain weak. So it's been so strong, in fact, that our intermediate term model has turned positive. The number of new lows is drying up. So it's really been kind of, like I said, exactly what you looked for. Now, I don't want to make it sound like everything's perfect. There's still a lot of stocks that aren't doing well, a lot of areas of the market. Even these small and mid cap indexes, which we'll look at, they're still well below, their February highs. So, and I would say that sentiment has become not buoyant or anything like that, but the fear and stuff like that has kind of vanished here for at least for now. So there could be some more reverberation. Some of these names are extended, pullbacks and all that. But with that said, like I said, I'm encouraged. We've been putting some money to work. We're still about half in cash, but I would say that's going to be dropping pretty quickly if the market and growth leaders anyway continue to act the way they're acting now. Okay, let's hop into the charts. As usual, I am using MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. Got my pen here. So here's the NASDAQ. And of course, this has been rallying anyway. This is just, if you want to get into it here, we have started to see a little bit of up, down action, kind of reversing a little bit here this morning. I mean, I don't want to make too much of it. We're still up, 0.5% on the day. So maybe if you're trying to look for something, there's a little bit of this, resistance or some selling coming in after this move. But I mean, whatever, we're still way above moving averages. So some sort of pullback or rest is, I think, probably to be expected anyway. Okay. And the S&P 500 last week, I think it was last week, did finally get above this sort of 4,200 area. I've explained many times, I'm not a big level guy with the indexes, but up is good. Okay, it's been positive. It's been holding the 50-day line here for a while, and now it's stretching higher, which is a good thing. The big difference this week, like I said a minute ago, was that we finally saw this, as of 3 weeks ago, say, it was like the NASDAQ was doing well, but like the equal weight S&P 500 was hitting like 2-month lows, like its lowest level since the banking crisis, so to speak, in March. But you can just see this is IWM, so we've really popped here. Again, we're still well shy. It peaked up here around 200. Here we are at 185. So there's still a lot of ground to be made up. And to this point, it's only, quote, only been, 3 days, 3 really nice days, but it's only been 3 days, which isn't as, persistent as like a 15-day move, general up move. But still, up is good. It looks good. It's well above its moving. Clean this up. These two moving averages down here. Okay. MDY, same sort of thing, mid caps. Again, 3 really good days, still well short of its old February highs here, but it's enough for us to call the intermediate term trend positive. Mike, what if we come in next week and it fails? Well, if that happens, then we'll adjust. I wouldn't go and put half your portfolio to work because small and mid cap index has had 3 good days. I'm just saying it adds to kind of the more positive evidence. Just to round out the other stuff we look at, the New York Composite, NYC. The New York Composite, not quite as strong, but again, you can just see clearly a little bit of a change in character up here, which is a good thing, okay? More than that, one of these days when I have time, so 20 years from now, I kind of want to do a more in-depth study of the XLP and just sort of its interrelation. I'm not a big, inner market analysis, but it really is, when you do have this, it's just telling you that money is flowing into, toothpaste and toilet paper. And if chips and networking and biotech and retail are kind of doing nothing, but everyone's buying toothpaste and toilet paper, I mean, it's telling you that the big investors are trying to, they have to remain invested. They're cautious. What's interesting here is really starting back here. So this was kind of more in mid-May. XLP started to really fade even before, I think, the AI thing. Maybe it was right in gear with it, but it really started to sell off here. And it hasn't even gotten off its knees. Now, I'm not going to read, it's not like a day-by-day thing. I mean, this could easily bounce. But, I mean, the fact that we're finally seeing this come off in a sustained way while leadership and breakouts are actually occurring it's a good thing. And that was really one of the first clues that maybe something was up. This is utilities. They've picked up a little bit here as rates have kind of steadied themselves. But overall, you can see clearly these aren't it's not like the market's rallying led by defensive stocks. It's just the opposite at this point, okay? Comparatively, I would say, SMH, this is really probably the leading sector right now. A lot of it's the AI stuff, so we'll see how it develops if the rally continues, obviously. But so far, positive action into here. This was your Nvidia gap, and nice follow through, and it's just held in here pretty tightly. Sure, it can wiggle around or whatever, but when you have SMH, really the leading growth group, acting well, XLP not, that's kind of, the recipe of what you're looking for. And just to look at a couple other things, this is, the IPO fund, nothing magic about it, but just obviously more, risk on sort of situations in the IPO fund, acting better. And just, I also wanted to mention on the broadening out front, this is XLI. I mean, I'm not industrials aren't my, bread and butter, obviously, but just first of all, the ETF itself really wasn't bad. It just was kind of range bound here after a nice rally late last year. And then it looks a lot like sort of the small and mid cap indexes, right? Sort of perking up. And so you have a name like, again, this is not my cup of tea, but Caterpillar. This one was a little bit weaker here, but, been bottoming out. So I'm just and I'm going to mention some other names that aren't like, software, networking and chips and all this stuff, just in case we do get some more rotation, we do get some more broadening out, maybe some of this growth stuff chills out or chops around for the next 2 weeks. They could pull back normally, and maybe some money, some other things emerge from different areas. Okay. So just to keep an open mind to it. But overall, like I said, it's, if you're going to draw something up a month ago and say, okay, we want the NASDAQ to lead. We want, the market to broaden out. We want breakouts to occur. We want more leadership to emerge. It's all kind of happening here with some good volume clues and all that stuff. So we'll see how it goes. There's no guarantees. Maybe we've all lived through the last couple of years, right? So there's been a lot of false starts. So we'll see how it goes. I wouldn't be cannonballing into the pool, but I definitely think the evidence is clearly becoming more constructive, okay? The last thing I would just mention here is, this is secondary to me, but, interest rates. This is the 10-year note, and it peaked up in October, which was the bear market low last year. But it's just kind of, number one, it's stopped going up, right? Lower highs. And number two, it's just kind of steadied itself. We're not getting, it's not up 75 basis points in 4 weeks, and then it goes down 60 basis points in the next 2 weeks. Now we have the Fed next week. Who knows? I'm not a big, Fed watcher, but maybe they raise rates and they're not expected to, or something happens where something comes loose. But I do think the fact that rates are A, not going up, and B, sort of calming down is a helpful thing. And the longer that goes, the better. Same thing, 5-year note. You can see it was up here at 4.5%. Here it is at 3.9, whatever, 7, 8 months later, whatever, since it's been October, right? 8 months later. So it's been a good thing on the interest rate front too. Okay. Now into stocks here. These are names that some of these aren't like right on my watch list. They might be on what I call my back burner watch list. But I'm going to start with some of these names that aren't really typical, or not in like the AI craze right now and stuff like that. So this is Five Below, which I've mentioned a lot. Actually, Rick, if you're watching, you kind of made me take a second look at this. But, a big structure on the weekly chart. And then this looks like a whole new structure. Now, dollar stores have been death. I mean, Dollar Tree, and here's just to show you Dollar Tree. This was an earnings gap down a couple weeks ago. Okay, so Five Below is getting dragged down. You can just see very, very weak. And then it gapped on earnings, and it's kind of turned right around. Now, there's still resistance up here. Like I said, it's got work to do. It's not something I would be rushing out here, but I'm just sort of flagging it. 3 good days of volume here. And sometimes when you get these sort of big, long corrections that go on for a month or two, and then boom, an earnings gap up, it can kind of change character in a hurry. Maybe it does, maybe it doesn't, but that's just something that I'm kind of keeping a distant eye on. Las Vegas Sands, China's economy is not bouncing back, I guess, with the reopening as strongly as thought. But nevertheless, I mean, Sands had a great run, a consolidation, tried to get out, but no, it's kind of come back here. If anyone's a history buff, go compare this to eBay in 2003. I know that's kind of out of left field, but so we'll see what happens. We'll see what happens here. But what I did notice here, it did have 3 good volume days off the low. Doesn't mean that much, but kind of a little bit of a clue here. And now it's hanging out just south of the 50-day line. I'm not going to give you a level or whatever. I'm just saying it wouldn't surprise me if this stock rounds out in a month or two from now. It's ready to go, maybe sooner, it's ready to go, because this really does look like kind of just net. Clean up this chart, but net, mean, this really just looks like just a kind of a straight sideways consolidation here for the last few months after a very heady run. Okay, so Sands is another one that it's been on and off my watch list. Boeing, I've mentioned Boeing before. It's just got this, these things can trend. What I noticed here is 2 weeks ago, it was its lowest weekly second lowest weekly volume on this chart. So going back to mid 2020, the only other volume that was lower was last Thanksgiving, holiday shortened week. So, and now we're seeing some volume come into it, even though they have some bad news this week. I think they're still having supply issues, or they had to cut production. I forget. But either way, you just have this very tight consolidation in here. If the thing can kind of come up and out, it's a Dow stock. It's not going to, you're not going to brag about it at a cocktail party, but I do think it can have a pretty good run. And then there are a lot of construction, infrastructure type names. I think I've mentioned Maztec before. I like this. Big base in here. This is kind of a consolidation in here. And just down here, it's had, at this point, 1, 2, 3, I think this is going to be its 6th straight weekly, above average weekly, what am I trying to say here? It's a 7th straight week up, but 6 straight on above average weekly volume. So, I mean, somebody's buying this thing. And the numbers here are lumpy with all these companies, but they, the backlog is growing and that sort of thing. So it's kind of a breakout here. I guess it's got some older resistance up here, but that's one name. Another one I just happened to mention is KBR, which is literally just, heavy, construction and stuff like that. And just recently, you can see the volume just right here. It's just taken off on the upside. Again, some of this stuff is happening with the broadening out of the market. So all of a sudden you're seeing some of these things, you're seeing some of these charts with these volume clusters in the broad market as opposed to just AI or whatever. So those are just some names to keep an eye on. Back in sort of the growth world, this is a little thinner. This is DigitalOcean. I honestly have to do some work on this. It's a little, I wouldn't say it's not too thin for me, but DOCN, pretty good story. And just one of these, IPO went up, got killed, but spent the last few months steadying itself and just clearly has kind of changed character in here, which is half the battle in the market. And now it's kind of hitting, obviously, multi-month highs. So it's kind of interesting. These are more, the names here are generally more on the pullback side. So, maybe this stretches higher and then shakes out again, something like that, allows the moving averages to catch up. But that's kind of a newer name, just wanted to flag. Procore, I wrote this up in Cabot Growth Investor. I like this story. It's a software company that's focused on the construction industry, actually, which is super inefficient. Just a very long bottom, and now this looks like kind of a proper, call it a cup or whatever, base. But you're starting to see some volume come in on earnings. Now you got a few weeks up in a row. It's challenging its old highs. Newer name. It's not super small. It's almost a $10 billion market cap, and they, $200 million in revenue a quarter. So anyway, that's one that I'm kind of flagging. Not the top of my watch list, but something I am keeping an eye on. I'm going to mention On Holding. The stock got killed on earnings. Okay, so it's not. I probably should have put this up with like 5 below. We have seen, and I've talked about it, these shake and snaps where these things are getting hit and then they snap back. They don't all keep snapping back. Some of them don't work, but we've seen more and more of that in the last month or so, maybe 4, 5, 6 weeks. So I'm just kind of keeping a distant eye on it. It needs work. I mean, it's probably best if it doesn't try to do this. It will probably fail. But it got some upgrade this morning, finding some buyers. I'm just keeping an eye on it. The sales numbers, the growth numbers are great. It probably needs some time, but eventually I think this could round out a base. So I'm just kind of flagging it here to keep an eye on. In the big cap world, which is kind of what's working, this is Adobe. Again, not super my cup of tea, but again, kind of been building this bottom for a while. This is the weekly chart, and now you have 3 straight really big volume weeks, 4 straight above average volume weeks coming out here to new, I don't even know. This is probably its highest level in well over a year. Okay, so, again, it's probably not going to go, it's a $450 stock, probably not going to double here in the next 3 months. But, maybe you get a pullback here or some sort of rest as the moving averages catch up. Confluence, CFLT. This is kind of, you can see it's a wild child here recently, the last couple of days. But this is kind of, to me, it's very interesting. Maybe this is sort of the storage play, data play, I guess I should say, big data. There's been obviously Splunk in years past, Snowflake. This one actually kind of seems like it might have something, and the AI is kind of looks like in some added juice. Again, you kind of have these weekly volume clusters here. It's not, again, it's a $10 billion market cap. It's not, huge liquid, but it's liquid enough, and it certainly has changed character here. It's hard to buy it when it's moving around, 8% a day or whatever, from high to low. So let's see if it can settle down, but that is one that I'm keeping an eye on. I have to mention Nvidia just because, it is, you look at this and it's extended still, and it is extended, and there was, there's some selling coming in here near the 400 level, but on the weekly chart, it's interesting. It just kind of looks like it might close. We'll see how it closes today, but it might close actually kind of 3 weeks tight, which isn't the be all end all, but it's the longer it can hold up here, the greater the chance that, okay, it can move. So I'm not going to say go buy it or don't buy it. You can make the decision, but so far the action's been pretty classic in here. Wouldn't mind seeing volume dry up a little bit, but so far so good on that. Okay. Advanced Micro Devices was another one. This one was in top 10 this week. The clue here was, this was the Nvidia move here. You can see the gap. And since then it's held in here choppily, but it's held in there. The clue here though was, again, we're seeing more and more of this all the way down here. This was a couple weeks before Nvidia. You started to get this weekly volume cluster, not just daily, of 1, 2, 3, 4 weeks in a row of big volume. Pulled back last week, up this week. So maybe it needs to, it's chopping around a little bit here, but totally normal in terms of above the moving averages. But that's just one that another chip player, AI exposure that looks pretty good and has been now consolidating here for a couple weeks. So maybe a little bit longer would offer an entry point. Celsius, CELH, just mentioning it, gapped on earnings. We saw a lot of these things act well on earnings or otherwise in May. And then even when AI was going nuts, these things were just kind of doing nothing, but not doing anything wrong, just kind of hanging in there. And now the buyers have kind of resumed. So Celsius, it's volatile, it's heavily short, but it certainly continues to act well. Just a couple more names. I still keep an eye on this next tracker. Solar really can't get going for all the talk of it. The move kind of was really last summer into maybe earlier this year. But nevertheless, on the weekly chart, it's a recent new issue. But on the weekly chart, it's really just, again, there was some tightness in here. It's acting fine. There's no selling going on. So I'm sort of putting it in the camp, kind of like Nvidia. It's not the same as Nvidia, but kind of like Nvidia in the sense where it's the longer it can kind of hold up here, even though it's extremely choppy, volatile on a day-to-day basis, the longer it can hold up, the greater the chance that, it wants to go higher. And last but not least, again, maybe I should have put this up top, but we are seeing some more like, this is Abercrombie and Fitch. Not changing the world, but you can see clearly a change in character. This was an earnings clue, I guess 2 weeks ago at this point, and just has no pullback since then. Urban Outfitters is another name. These have both been in top 10. URBN, nice, bottom in here, and then just a very nice long consolidation, and then a big volume earnings gap. And the stock, it's not going up 10% a day or anything, but stock continues to act well. So there's more and more stuff. There's stuff that's acting well. Some of the extended stuff seems like it's starting to, I don't want to say it's going to pull back or whatever, but it's starting to chop around a little bit, digest, which is totally normal. And we're seeing some other areas improve as well. So we'll see how it goes. I mean, again, we've all lived through the last couple of years. And, just like long bull markets, they're hard to kill. Hey, these long bear markets, they don't just go away in a day usually. They're hard to kill. But we've seen that here in the last few months where there's been a lot of bad news and testing and debt ceiling and banking crisis and blah, 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 Fed rate hikes, But now we are starting to see some things for the first time really since 2021, early 2021, in fact. We're starting to see some things really let loose on the upside, and not just like speculative meme stocks, but well-sponsored institutions. So I think you just got to go with it. Doesn't mean you have to cannonball into the pool, like I said, but I think the evidence is improving. You don't want to chase things that are extended. So ideally we get some pullback, some rotation, some, these things chill out for 2 weeks while their stuff over here emerges. But certainly, if you're just looking at price, volume, trend, and the action of leading stocks, there's a hell of a lot more good news today than there was a month ago. Okay. That's all the time I have for today. As always, thanks for watching and listening, and come by again next week for another Cabot Weekly Review.